Hi guys, welcome back to our channel. This is Blue League FX Markets. We've been getting requests on our contact details. People have been asking for our contact details. So if you have any inquiries regarding our mentorship, you can please email us at blueleague.fx@gmail.com and we'll get back to you. Because a lot of people have been asking for mentorship, so we've decided to create an email address where we can talk to people and actually get them mentored in a way and teach them how we actually trade. In today's lesson, it's going to be a long lesson because I want to introduce you to something new, something called smart money concept. It's the way big banks trade, and sorry to make this video long, but I want you to understand. So before we go to the charts, I just want to create a short lesson explaining how smart money concept work. So this is how smart money concept work. Firstly, the market will, let's say we're in an uptrend market, and it keeps on making um, higher highs and higher lows. So the way smart money concept works is we wait for the market to break structure. So it breaks a swing high or a swing low, depending on which market we trading, uptrend or downtrend. So after it breaks that structure, we wait for the market to do a pullback, a reversal, some of you may call it. So the reversal can be somewhere here or it can be down there, it depends on how deep the reversal is. Then what we do is we put our entry just here and we put our stop loss, our entry there, and our take profit just there, and our stop loss there. So this type of trading helps you with risk to reward entries, because your entries become sniper entries and it makes your stop loss very minimum. So this type of trading is very profitable because it helps you to understand a lot of things like liquidity, order blocks, imbalances and all that. But I'm not going to explain all that in this lesson because I don't want to make this video long. For those who want to understand this whole concept, they need to email us. As I said, our email address is blueleague.fx@gmail.com. So you can pause the video and take the email address if you want to know more about this type of trading. So it's called smart money and it's very profitable, like I said, but it needs someone who's very patient and someone um, who's very patient to wait for the price to play out the way they want it to play out. But anyway, let's hop to the charts so you can see what I mean when I speak about the smart money concept and how profitable it is. So we're trading Euro USD and we on a 4-hour chart. So as you can see in the 4-hour chart, the market did what we call a break of structure. So it did a break of structure there. So we'll label that break of structure to the downwards. Then after it broke structure, what we'll do is we'll wait for the market to create a swing low, because now we have our swing high. That's our swing high. We'll wait for the market to do a swing low. Looking at the price here, I think it's quite clear that the market has done its swing low. Now it's going back to collect orders in what we call an order block or a point of information or a point of interest for those who are still new in the concept. Then what we do is we'll take our Fibonacci retracement and we'll want to understand where is the price, is in discount zone or is it in premium zone. So since we're moving downwards, sorry about that. Since we're in a downward trend, anything above this 50% line is a sell, and anything below this 50% line, it's a buy. So this is called premium and discount. So we want to get price in a premium place, and we also want to get it in a discounted place. So this is what we do firstly. Now, after that, we'll go and identify our 4-hour POI. But all the POIs we need to identify need to be um, within our above the 50%, because we want price to because we're looking for price to pull back, takes an order, then continue going down. That's what we're looking for. That's why we'll want everything. We'll want a order block which is above this 50% line. So the first order block I see, so an order block, it's a candle opposite to the direction of the market. For example, I can say this is an order block. No, not that. I can say this is an order block because it's a buy candle which pushed the market downwards, but the market went downwards. As you can see, we had two engulfing candles. So I can say this is an order block. So we can identify that as an order block. So we identify the whole candle. Then we continue, we look for other order blocks. So even this is an order block. Not there, I meant there. So that's also an order block, because after that candle the market went down like with three engulfing candles, and this isn't for our chart. So these candles, it was quite a big push. It's like 4 hours of push, 4 hours of push, and 4 hours. So in total it was 12 hours. So I can go ahead and delete this Fibonacci retracement. Then again, we can also identify this part as an order block. And like I said, I can't explain everything now because of I don't want to make this video long. Then after identifying our order blocks, we need to go ahead and identify our liquidity zone. So this part, it's liquidity. This is our liquidity zone. And also we also have equal highs, so that becomes our liquidity zone too. And also this part becomes our liquidity zone. So like I said, guys, I want to explain what liquidity is, but it will just take a whole video on its own to explain all that. So for now, just understand that liquidity is something like double bottoms, double tops. There's no such thing as double bottom, double tops. Those are actually liquidity. There's also trend line liquidity, which is what happened here, and liquidity there. So just because we have liquidity above this order block, I'll call this order block a fake order block, and I'm expecting the market to pass right through it. So this becomes a fake POI. Then we move on to our next order block, this order block. Now, because there's also liquidity above this order block, we're expecting the market to push above it. So it's also a fake POI. Now, we check this order block. There's nothing above that order block. So this becomes our veil. It becomes a strong order block. So we can name it a 4-hour point of interest. Now we let the market play out and see what happens. So as you can see, the market continues, but when it gets to our order block, it starts the price starts rejecting. Now, why is the market rejecting? It's giving those who don't understand which order block to take a false hope that the market will shoot down. So it's getting people to say, look, it's rejecting a lot. And don't forget, this is a 4-hour chart. So if you see this kind of rejection, what do people do? They start putting in their sell orders. Start putting in their sell orders. So this becomes a lot of liquidity. Sell orders, then they would put their stop loss right there. But check what the market does after, because of this liquidity. It needs to go above this liquidity in order to sweep this liquidity and also close any imbalances which it can find there. So let's continue. Then the market goes and takes all the stop losses and all the liquidity formed here. As you can see that if you had a buy, a sell order here, you could have been in profit for a short time. But this engulfing candle, the reason it happens because it wants to take your stop loss quickly before you even realize it. So I'll go ahead and delete this. I just wanted to make you guys understand that some orders are just there, order blocks are just there to trap you to believing that something is there and it's not. So we can go ahead and delete this order block. It was not really a order block which we are supposed to use. Why? Because of this liquidity. We had to sweep that liquidity away. So our next order block is this one. Now there is liquidity there. So what's going to happen? If you guess that the market is going to go ahead and sweep that liquidity, then you're right. So we're expecting the market to sweep everything here. But before it does that, it's going to have rejection. Just give people hope for a little bit before it continues going up. So as you can see, the market reacted order block, but then these engulfing candles went ahead and swept all the liquidity there. So the market continues going to the going up. So we can cancel that order block. It was not it didn't hold the price as we want. So now the only order block we left with is this order block. So we're expecting this order block to sweep this whole liquidity, this double bottoms, this double tops, I mean triple tops. So this is liquidity. So we're expecting it to go above that and sweep it away. But we want the market to go and touch our 4 hour point of interest in order for us to move to a smaller time frame and actually find an entry there. So we let price play out. So as you can see, the price touched our 4 hour point of interest. So what we do is we move to our 15 minutes chart in order to find entries. Now in the 15 minutes chart, we'll look for our swing low before price touched our point of interest. Now a nice swing low I can see is this. So we'd wait for price to break below, to close below that swing low in order for us to actually have an entry. So we let price play out. So as you can see, we can take that as our break of structure because price did come and uh, would say it did break our structure. So there's two types of confirming a break of structure. Some people would wait for a candle to close above this break of structure, but it depends on what you're trading. For example, if you're trading indices like US 30 and Nasdaq, you wouldn't take this as a break of structure. Now because you're trading Euro USD, you need to understand each pair and how it operates. Now after the market closed above, the market broke our structure, then find an order block, 15 minutes order block, and we then have our order, then our stop loss, we can choose a 2 pips stop loss, or just to be safe, let's just say a 3 pips stop loss. Then our target, in order to find our target, we need to go to our 4 hour chart because the reason we're here is because of the 4 hour. So we need to target the lowest point of our 4 hour for this to happen. Sorry, I'm not sure why this is doing this. This one, okay, sorry, this is jamming. Let's give it a moment and see what happens. Sorry about that, guys. Google Chrome was giving me problems, but it looks like it's back now. So where do we target? We go and target this part, which is the lowest part the market went before it went up, and to before it went up and took our orders. So that's where we target. Let's go back to 15 minutes and see if our order was triggered, because we trade this using orders. So we'd set a sell limit there. Now let's check if it was clicked and see what happened. So let's play price. So the market is still playing, just ranging, but as you can see, the price came and took our orders, didn't even click our stop loss. So that's the nice thing about trading smart money concept. You can have a very small stop loss, but you can have a huge TP. Let's go back to 4 hour, just so we can fast forward price and let it play out faster. So back on our 4 hour, let's see how the price plays out. So you can hold this trade for like days, and you can invest something like 3,000 to make about 100,000 with smart money. It's quite a profitable strategy. Let's just play price and see what happens. As you can see, price started moving down. So in this, you can start moving your stop loss to your break even somewhere there, just to protect your price. But we will do a video explaining how you lock profits when the market keeps doing this. Now the market keeps moving and TP is hit. Now, as you can see, this is 4 hour chart. So you were able to have a sniper entry there and took price all the way down up until there. Easy as that. You just have to understand what liquidity is, what break of structure is, what imbalances is, and you'll be able to trade this. Simple as that. Now let me recap again on what we did, so you can be able to understand. So price was having a downward trend like this. So it broke structure. So this was our break of structure. So we waited for price to go back to our order block or a POI, which was somewhere there. Then price, so this became our, okay, pardon, sorry. So this was our 4 hour chart. Then we had a 4 hour POI. So we waited for price to go back to our 4 hour POI, and when it touched our 4 hour POI, we moved to 15 minutes. Now in 15 minutes we saw something like this. So we waited for price above to break above this, and this we call change of structure. We waited for price to do a change of structure, then it left the POI here, then we had our order there with a very tight stop loss, and we just targeted where price is coming from. Then price went back, touched our order, then went down. So this is the concept of smart money. I know it's quite difficult if you don't understand it, But if you want to have sniper entries like the one we had here, then you need to understand how smart money is done. And like I said before, this is how we trade in our Blue League Academy. We have entries like this. Now, if you have a very small account and you want to grow it, then you need to have sniper entries like this. So let me take you back to our contact details for those who want to understand how we trade. If you want to get in touch with us, don't know why this is doing this, because the details were just here. But if you want to get in touch with us, you can email us email us at blueleague.fx@gmail.com. Simple as that. Hope this video was helpful, and please don't forget to like, subscribe. So yeah, this is the email address. Just contact us there. Please don't forget to like and subscribe. A lot of people are watching these videos. This is like free content, but they don't subscribe. They just watch and not even comment. So for those of you who've subscribed and commented, yeah, thank you, and yeah, stay in touch.